Get ready for more valuable financial insights from Northern California's premier retirement income planners, Dan Ahmad and Jim Files, owners of Peak Financial Freedom Group. For more information, go to peakfin.com. And now, here's Dan and Jim.
We'd like to welcome you to the Peak Financial Freedom Hour. This is Dan Ahmad and Jim Files, and we try to give you every week as much information as possible to allow you to educate yourself so you can start making the best decisions about your money. And we say that in a way that we know so many people that are really good savers that really have succeeded. They don't know they've succeeded, and they feel like they made so many mistakes. They haven't saved enough. They didn't buy the right asset. They bought the wrong asset. They didn't do enough of whatever, and they feel like they haven't succeeded. Well, we want to make sure you understand the parameters of success at retirement. We'd like to thank you all who listen to the show. We have a lot of people who are clients that listen to the show, and we are so glad to be able to give you data on a weekly basis. We have people that listen to the show for years and years and years, and we'd like to thank you. And we have new people listening, so we're glad that you've tuned in. You can also go to our website and listen to our podcast. All the radio shows we've done are recorded, and you can listen to any of them there. You can go to our YouTube channel and look at a bunch of videos. You can go to our website. There's videos there as well as downloadable information, including our most recent best-selling book on Amazon, Mama's Secret Recipe for Retirement Success. So a lot of data. And we also want to make sure that, especially those people that have listened for a long time, it's funny because we get someone calling in all the time, and they'll come in and we'll meet with them for the first meeting, and they'll say, yeah, I've been listening to your show for 5 years and I finally called in. And we're like, what took you so long? It doesn't cost you any money to meet with us. It's free. You're not going to feel any pressure. We're going to design a retirement income plan for you, give it to you for free. You get to take it home, and there's no cost or pressure associated with it. So what took you so long? So I'm going to ask everyone right now, what took you so long? If you need us, dial pound 250 on your cell phone and say the keyword money, pound 250 and the keyword money, and we'll go through exactly where you're at, find out if we think we can help you. If we can, we'll design a plan for you. It's not going to cost you anything, and there's not going to be any obligation. So make sure, give us a call. Jim, why don't you start us off this week with what you think is the best quote for what we're going to talk about?
This falls into exactly what we do every single day at our firm, exactly what we talk about every week, exactly what we demonstrate on our TV show. And it's from Earl Nightingale. And what he says, as in all successful ventures, the foundation of a good investment or a good retirement is planning. Again, as in all successful ventures, the foundation of a good retirement is actual planning. And that's exactly what we do here. You listeners right now, if you're not our client, if you haven't been in our office before, if you haven't gone through our process, you probably don't really understand what planning is. We try to talk about it. We try to educate you. We try to give you case examples, but you all, I think, kind of think of a planning differently than the way we do it here.
Well, it's because they don't even know planning exists.
That's right.
It's because they've been told planning is their portfolio. It's because they've been told their total plan is their dumb statements they get every month or quarter that they don't understand. And it's because they've been told you don't need a plan because you have me, your advisor, and you're fine. Everything's going to work out. They don't even know a plan is available. We looked at all the firms in this area, Northern California. We didn't find one firm that actually creates what we would then sign off on as an actual customized written retirement income plan that you're starting to talk about. It's because they don't even know it exists. They all want it. Who wouldn't want everything about their money in writing? But the problem is they have no idea it even exists.
And that's the point. If you're listening right now, you don't have any idea it exists unless you're our client, unless you've been through the process. You have no idea. It's not what you have now, because what you have now is not a plan. You don't have something in writing that's been signed by a fiduciary, that's been signed by your advisor, that states how much risk you have, how much you could lose if the market goes down. It's in writing. What your fees are, what your hidden fees are, it's in writing. What your income going to be by income source for the rest of your life. When you should turn on Social Security if you haven't already done so. What about your assets? How do you position those assets? Is the income guaranteed? Is it not guaranteed? Will it go up? Will it go down? That's laid out by month and by year for as long as you live. You can actually see the future and exactly know how your income is going to be generated and how it's going to come to you. Will it go up? Will it go down? Will it go away? How about after-tax income? In the background, there are basically tax returns done in the background that shows you your gross income, what your federal and state tax is going to be, every year what your net after-tax income is going to be. It's going to show you your budget, and your budget's going to increase with inflation. It's going to show you have enough money to maintain your budget this year, next year, in 10 years, in 20 years, in 30 years. Do you have excess cash flow above your budget so that if inflation is greater than what it might be, or if you need long-term care, do you have enough cash flow to maintain those expenses? Then it's going to show you how much is going to be left in your portfolio, your assets at any given year if you or your spouse pass away, if you're married, or if you both pass away. Then all that's put in writing, the details. Where were you at when you met us? What were your objectives? What did you want your money to do for you? What are our recommendations? How do we support our recommendations? What are the advantages of the plan? What are the disadvantages of the plan? And how are we going to execute the plan? And how does everything work? That's read out loud to you. If you had that, do you think you would have a more successful retirement? The answer is yes, period.
Well, and with what Jim just talked about, you can't just sit back and say, oh, yeah, I have that. You can't poo-poo this. You can't say, oh, I don't need that or I already have this, because we know you need it and we know you don't have it. Why? Well, in the 40 years we've been operating in this business between Jim and I, only 3 people out of 4,000 people have had actual written plans that we would say are adequate and acceptable in helping someone understand what they need to do with their money and covered all those things that Jim just covered. So if you can imagine 3 out of 4,000, that means basically no one has a plan. And it's because you don't know that a plan is available. You don't know that you can get a plan. You don't know that it's available. And just think about it right now. If you're worried about your money as far as risk, and so many people are, just because of the stock market, the world, what's happening in politics, everyone's freaked out. Doesn't matter who you are, you're freaked out. Well, if you have no idea really how much risk you're taking, you don't know what to do. But what if in writing it showed that you have high risk? And what's high risk? To us, it's anything above 30% risk is going to be really, really high risk, meaning if the market goes down like 2008, you lose 30, 40, or 50%. And we find anybody who has a portfolio, all of them, it's like almost 100% has 30% or more risk, with the average being about 40% that you could lose. So for every $1 million, are you willing to lose $400,000 now? And the answer is no, not if you're ready for retirement or in retirement. The issue is you don't know that because no one's put it in writing. So what if we put that in writing that shows this is how much risk you have? Are you comfortable with that? And you say no, then we design a plan and put in writing to show that you have a lot less risk. What if we could drop your risk from 40% down to 5%? And let's say the client has $3 million. That means they're going from a $1.2 million potential risk down to $150,000 risk. And can they handle the $150,000 risk versus the $1.2 million?
Well, the strange thing about all this, as you state that, most people thinking if they do have $3 million, they probably think they only have $150,000 risk. They probably think that in their mind.
Oh, yeah.
They probably think that, which is completely wrong.
Because that's all they want.
That's exactly. If you have a 50-50 portfolio, 50% in fixed income, right? 50% in equity, stocks, you have a risk factor greater than 30%. Greater than 30%. So if the market goes down by 50, you're going to lose more than 30.
And what if they have that kind of portfolio that most retirees have, 60% stocks or stock mutual funds and 40% bonds or bond mutual funds?
You have a 38.53% risk factor, which means that's how much you're going to lose approximately if the market goes down. We have all the data here. It's research data, right? We have research engines that we use for every client to determine what the risk factor is. We can tell you based on how you're positioned today, every asset you own, whether it's a stock or a fund or a bond, it doesn't really matter. We send it off and they will come back, a customized report showing you how much you're going to lose if the market drops like it did in 2008 and 9 and 2001 and 2, the tech bubble and the financial crisis. And a lot of you say, well, Jim, maybe the market won't drop again like that. Hey, folks, the market's dropped by 50% twice in the last 25 years. It will happen again. We're way overdue. And it does not warn you. It just happens. So if you're getting close to retirement, you better understand this information and you better be positioned correctly, Dan.
You mean I can't sign up for a text alert from the stock market that when the market, before it's going to crash, they'll text me and say, hey, Dan, the market's going to crash. You might want to get your money out of the market. Surely there has to be something that can do that.
There isn't. And the problem people have got, entertained of late is that they've become very complacent. Because after the last financial crisis of 2008 and 9, the market went up, but it was artificially stimulated, which means for 13 years, the Feds lowered interest rates basically down to zero. If you were a public company, CEO, you would go to your shareholders or you go to your board and your management team and say, hey, the government's giving me free money. So what you do is that you buy shares back. Your earnings are the same. The stock price goes up because you have less shares outstanding, and management and the board makes lots of money on buying shares back. And that happened for 13 and a half years. And all of a sudden, in 2022, the market, the Fed said, nope, we're not going to do that any longer. We are going to raise interest rates. And guess what happened? Volatility started again. So that 13 and a half years you saw, where you basically had free money, the market went up no matter what happened, is not going to happen again, folks. We got $37 trillion worth of debt. They cannot do that again. So you better be used to volatility, and you better position your assets differently.
Oh, definitely. And it just comes down to knowing. If you don't know, you can't make any changes. So that's why we'll always state, you better have every single thing about your money in writing. We're just finishing a new book, and it's called The Golden Promise. And we wrote it because it talks about what we really do that we find minimal, if any other firms are doing, and that is putting every single thing about our clients' monies in writing, designing an actual plan that'll show their risk, as Jim talked about, the fees. More importantly, it'll show the income you're going to receive for the next 30 years, and it's going to show how much tax you're going to pay. So it'll show you each month how much net income after taxes you have to spend, which is what's going to then drive your retirement lifestyle. The higher net income after taxes we can give you, the better lifestyle you're going to have at retirement. Welcome back to the Peak Financial Freedom Hour. Dan Ahmed and Jim Files, and we're talking about a subject associated with the quote of the week. And the quote, Jim, you gave earlier was, as in all successful ventures, the foundation of a good retirement is planning. And that's Earl Nightingale. And as you stated right off the bat, that's what our whole company is focused on, doing planning, and more importantly, doing planning in writing that allows every one of our clients to feel that they just don't have a good foundation or solid foundation. Their foundation is in cement. It's going to happen. And when you look at why people don't get this, we talked about it earlier, is that no one in the marketplace is really teaching them that they better have a written retirement income plan. That's what we say every single time, every single minute. It's what we do. They're told, oh, guess what? For your planning, all you have to do is keep the money in the stock market and everything will work out. You'll get huge rates of return. You'll battle inflation. You'll be able to take a high level of income. Your money will never run out, et cetera, et cetera. And all those things are maybes, they're what ifs, if the best case scenario happens. The problem is, we don't think anyone should ever, and we will never design a plan that bases everything on the best case scenario. We have to plan for the worst case scenario. Why? Well, since 1929, we talk about it over and over and over again. Since 1929, the stock market every 5 years goes down on average about 40%. So to me, those are kind of like the worst case scenarios. The problem is it's happened every 5 years. So it's almost not like a worst case. It's kind of like what we have to plan for. So in retirement, if you have 30 years of retirement, it means we're going to go through 6 more 40% losses. You better put your plan together so you're not negatively affected with those 40% losses every 5 years. Because if you're not protected and you lose 40% and you're taking 5% of your assets out each year, that could end up being closer to 75 or 80% loss of assets, which means, is there any possible chance you're going to survive through that nightmare?
No, there isn't from our perspective, right? But you can change the game up. And we talk about planning every single radio show. We talk about planning every TV show. And it's amazing because you don't have a plan. We know this. We do this every day. You don't have an income plan, a tax plan, a legacy plan. You don't know how much risk you have. You don't know what your fees are. It's amazing. We should only have to do one show ever.
Well, think about it. Is that why ignorance is bliss? And people, they worry about their money, but they don't take a lot of action because they kind of just hope everything's okay. Yep. The head in the sand, like the stork, right?
Yep. Yeah, because if you listen to our show for an hour, right, and we talk about planning, we talk about risk mitigation, we talk about income generation, we talk about preservation of assets, we talk about putting this in writing, income plan, tax plan, legacy plan. We should only have to do one show and get 10,000 people to come to we should never have to do another show because every single person should say, that's what I need.
Well, how about this question? Why would you be retired, or why would you think about retiring in the next 5 years without having every single thing about your money in writing? And let's just be silent for a minute so you can hear a pin drop. Why would you do that? It's because you don't know that it's available. But when someone tells you it's available, the worst single mistake you could ever make out of any mistake you've ever made with your money is then not getting a written plan for yourselves. Whether you work with us or not, we're going to give you a free plan in writing. Think about that. You don't have to become our client. There's no cost. There's no fee other than the time you got to spend with us to help create this. It's going to be no cost, no pressure, and we're going to design a plan. The reason we do this, and we tell all the secrets. The reason we do this is because we know if we design a plan for someone that's in writing that shows they're going to have a successful retirement, we feel that 80% or more of those people will ultimately become our clients. So is that worth it for us to do all these free meetings, give all these free plans away if we end up getting 80% of the clients out of it? Heck yeah, it's a great way for us to give back to the community. And if you don't want to become our client, it's okay. We're not going to be mean to you. We'll say, guess what? If you need our help in a year or 2 years or 3 years, call us back. And if you have other clients like you that you think might need help, refer. So even the people that don't become our clients, right now, some of them become our clients a year, 2, 3, 4, 5 years down the road because we were nice to them. And a lot of those clients, even if they don't become our clients, they actually refer their friends and family to us because of how we treated them with respect. And we honored every single promise we made, and we put everything we could in writing for them.
You know, this isn't some boilerplate plan. I just recently finished up with a client. She was single. And when she finished up, she was very constructive, a little bit negative during the first meeting or two, because she really was apprehensive because she dealt with advisors in the past and she never got what she thought she was supposed to get and moved around a lot. When I was done with the process, she told me, she said, Jim, why can't you guys explain in detail how comprehensive and how powerful this plan is? Because if people really saw your plan and really went through this process, there's not one person that wouldn't do business with you. That's what her comment was. And if you saw our plan, if you saw the process, it's not boilerplate. These are customized plan. Dan has spent many years in this business as a certified financial planner, as an enrolled agent for 30 years with the IRS, as an accredited tax advisor, building out this software. We had to hire a company in order to make this a web-based platform so other advisors that we mentor and coach can actually use this around the country. We searched the country. I ran a software company for many years. I actually took it public, ran it as a public company. We could not find any company in North America that does what we do at our level. None, zero. We do not want to be in the software business, but we had no other choice because we had to deliver what we thought was the most powerful plan in the world for clients, and nobody was doing it. So we did it, and it's powerful, Dan.
Well, it's powerful in that it was designed for one purpose: to answer the questions and concerns and the needs and to eliminate the worries of consumers. So we didn't design it to say, oh, we're going to design this wonderful software program that's the best in the world. We said, let's design a software program that makes it easier for us to do our job and is very efficient to show someone in writing how much risk they have currently and how much their risk can go down, what their fees are in writing and what their fees can go down to by enacting a plan, where their income is going to come from for as long as they live for the next 30 years, how much tax they're going to pay. How about what decisions should they make on claiming Social Security? How about the big question everyone always has when they come in here is, how should I invest my money? Meaning, how should I allocate my assets? What about how much they can potentially leave to the beneficiaries? All those things are questions people have. And that the software wasn't designed to design this wonderful software. It was designed so we can answer every single one of the questions you have about your money so you can stop worrying about it. You're back with Dan Ahmed, Jim Files, the Peak Financial Freedom Hour. And today we are talking about planning and the mandatory nature of planning. You have to have a plan at retirement or before you retire so that you don't have to worry. And if you already retired without a plan, I'm amazed at your courage and your bravery. I'm just amazed because to retire without having a flipping plan, I'm like, how could anyone do it? Well, people do it because they don't realize that they can get a plan out there. Or if you're planning to retire, how can you even come close to pinpointing a date unless you have it in writing that everything's going to work out? And again, if you're planning to retire 2, 3, 4 years down the road and you go, that's when am I going to retire? You don't have a plan. That takes a lot of bravery, a lot of courage to do it. We think it makes a lot more sense to have a plan. If you're retired now, let's create a plan that shows for the next 30 years, everything's going to work out. If you haven't retired, let us help you pinpoint that date when you can retire to make sure everything's going to work out. And if you haven't retired, I would say, I'm going to guess 3 out of 4 people that come to us that haven't retired based on when they think they can retire before they met us. 3 out of 4 people, Jim, can retire significantly earlier, either 1 year earlier, 2 years, 3 years, even 5 years earlier. I just did a plan last week for a client. She's going to retire 8 years earlier than she thought she could. And she's so stressed out at work right now at 62. I can't imagine her going another 8 years. She'd be freaking out. She'd be having heart attacks, strokes, every single thing happening because she's freaked out. She already has a tick in her eye right now. She's so stressed by it. And when we put a plan together, it allows us to answer those questions.
Yeah, and Kenneth, we keep on, hammering on a plan, and a lot of you are sitting there thinking, okay, do I have a plan or don't have a plan? Maybe
I can answer that. You do not have a plan.
One. No, you do not have one. I don't care what you say, and your advisor is not going to do it for you if you have an advisor. Because if he did it, you would already had one. And if you call him on the phone, he's going to say, oh, yeah, we'll put those numbers together for you. Next time we meet, we'll talk about it. And they'll just keep on kicking the can down the road. If you don't have a plan, you're not going to get one because that's not what your firm does. And you have to understand that this is your money. And the way you got here was completely different because for 40 years you worked and you were dollar cost averaging every 2 weeks with your paycheck into your 401k plan. When the market went up, you made money. When the market went down, you were buying at a lower cost, and it stretched out over 40 years. And yes, your retirement account went up, but you were putting money into it over a long period of time. Now, all of a sudden, you retire, you're 65, and now you're going to take income away from that account, and you're not investing monthly or every 2 weeks. It's a different game, folks, and you cannot use the same strategies. You cannot use the same asset types, and you have to develop a plan that's going to navigate you through all the ups and downs of the market to make sure that you can spend money in retirement and know that you're not going to run out of money.
Well, and it comes down to right now, again, if you know that a plan is available that will answer literally every single question you have about retirement and allow you to see exactly what retirement is going to look like, and it doesn't cost you one penny and you're not obligated to enact your plan, why in the heck wouldn't you do it? Call right now. Don't wait. Call pound 250-250 on your cell phone. Say the keyword money, pound 250, and say the keyword money. It will allow us then to find out if where you're at this point in life with what your goals are, should we meet to find out, can we now build you a plan that could work? It's literally that simple. And the goal is always going to be to put yourself in a position where you don't have to worry about your money as much. Well, if you go into retirement and you do not have a plan in writing, or if you're already retired and you don't have a plan in writing, it's 100% guaranteed if you're married, one or both of you will significantly worry about your money and will continue to worry about your money. And the worrying doesn't go down. It doesn't decrease with age. It always increases with age because we worry more and more. So we want to put together a plan that will allow us to do this. People always ask us, why would we do these things? Why would we spend so much time creating a plan? All the resources, how much it costs to put these plans together and never put any pressure on people we're sitting in front of to become our clients. It's because we feel confident, as I stated earlier, that 80% of the people we design plans for will become a client. Well, that's a pretty good odd compared to the percentage that other advisors get as far as bringing clients on board. If we design an actual plan, meet with someone and give them their plan in writing, we think we have an 80% chance to then make that client, that person, our client, which is great. And then they're going to stay a client because we're the only ones doing the plans. If we just design a plan for them, they don't want to go to someone new who's not going to give them a plan or monitor or update their plan. They want someone who's going to give them their plan.
Yeah, and the key to this planning process is that this is for you. This is customized very specifically for what you want. This is designed and put together in writing for you. This is signed by Dan and myself as founders of Peak Financial Freedom Group and as fiduciaries. This is laid out for you on a customized basis. This is going to tell you everything you need to do right now so you don't make a stupid financial mistake. And staying the course with all your money isn't a good plan, folks. I'm telling you, it doesn't work. We have really, really sophisticated stuff that we do here. I mean, we divide money up the bucket, right? We got money in cash to make sure it's safe and secure, it's liquid. We have money in guaranteed products, so your income is going to be guaranteed for as long as you live. We have money in the market as well. We oversee hundreds of millions of dollars in the market. It's not that we don't like the stock market. It's just that, well, maybe we do. We don't like it because it's unpredictable. And we're using very sophisticated stuff. We're using algorithms to manage the money. We're running beta management, volatility management.
And to clarify, though, we don't like naked money in the stock market.
Yeah.
Naked money means you do not have any risk mitigating strategies that can help you reduce the severity of large losses. At that point, if you're retired or getting ready to retire, why in the heck would you ever do that? Why would you just have no risk mitigation strategies on it? It's because no one ever offered them to you. So we like the stock market as long as there can be risk mitigation strategies put on the stock market investment.
But even so, I mean, we use very sophisticated stuff here, right? But nevertheless, there's no way we can foretell what the market's going to do. So folks, you can't have all your money in the market because it's undependable. It's unpredictable. We have money in the same assets that we're telling you to put money in. Most advisors don't do what they tell you to do. We do exactly what we tell you to do with our own money, exactly and precisely because it's the right thing to do for people that are getting ready to retire or retire. We're trying to safeguard the assets to make sure that you have a successful retirement. And putting all your money in the market, folks, it is not going to work long term.
You're back with Dan Allman and Jim Files, the Peak Financial Freedom Hour, and today we are talking about the need to have a plan. We were general up until this point. Now let's be specific, and let's look at the need to have a plan to do two things. Number one, provide guarantees that a certain portion of your assets will never suffer a stock market loss. And number two, allow you to generate dependable, more so, guaranteed income payout rates of 7%, 8%, 9%, even 10% or greater that will last for as long as you live, regardless of how long you live, regardless if the stock market crashes, regardless of whatever you earn or don't earn in your account. And even if you use up your account balance, your income will continue to be paid to you for as long as you live. Now, if you can get that in writing, if you can get in writing that however much of your assets you want to put into a plan that has no stock market risk and will give you the highest level of income guaranteed for as long as you live, is that an even bigger reason why you should have a plan in writing? And the answer is 100% yes. We just worked with a client, and it's a single guy. He's 67 and he wants to retire right now. And he should have retired a couple of years ago, and he could have. He just didn't know he could. He came in and I said, yes, you can retire now. So we looked at his plan, and he has about $2 million of assets. He's going to get Social Security, which will be about $50,000 a year. He gets a small pension of about $20,000 a year. And currently he makes $160,000 and he nets about $80,000. So he nets about $7,000 a month. And he says, yeah, I can survive on that. I don't get to do the things I want, like travel and stuff, but I can survive on that. So we put a plan together with the $2 million of assets. And on the $2 million of assets, we're going to generate him an additional $130,000 a year of income. So that means he's going to be at $200,000 a year of gross income. After taxes, he's going to be right at about $160,000, which means he's going to be just shy of $14,000. Let's see, is that about right? 14,000?
Yep.
So right in there versus the 7,000 that he had before. What's that going to allow him to do?
It'll change his life. We'll make it simple for you. Let's just take an example. Let's say you had $2 million and you're getting $50,000 in Social Security. You got 20 grand in a pension. That's 70 grand, right? And I'll just make it real simple. Let's say you're 67, single, and you put $1 million in the guaranteed product, and you're going to get 80 grand or so a year in guaranteed lifetime income. So now your 70 grand goes to 150,000. What if we took the other $1 million and we put that in the market, and you could be aggressive? And let's say you took another 4% off that, and you can be aggressive. But if the market dropped, guess what? That $150,000 a year, it's not going to drop. It's guaranteed. The other $1 million you have in the market, do whatever you want, let it be risky, but all of a sudden your life will change because you'll have enough guaranteed income between Social Security, pension in this example. You may not have a pension, but this person did in my example, and guaranteed lifetime income. It will change the way you look at life.
Well, and I think another way to then branch off of just exactly what you're talking about there is what also changes people's lives. It's by giving them what they want that they didn't think they could get. And every single client, whether they've retired or getting ready to retire, that comes in here, if you had to say, design a philosophy for what they want their money to do, it's pretty simple. Every single person wants to do this. Number one, they want to grow their assets to the highest possible amounts by the time they retire. So I call that their pile of assets. What you have to look at that, it's not just their portfolio. It will include their portfolio. It will include their real estate, and it will also include their bank. So let's say right now someone has $3 million of what we'll call net worth. Meaning if they died today, that's what their beneficiaries will get. So they want to grow that to as much as possible by the time they retire. Then number two, they want to take as much income, the maximum income they can take out, as long as number three, they never run out. So at that point, it makes it very simple then to calculate out how much they can take out. But they also want to do number four. They want to make sure if they do take the maximum income, they're not going to be in too high of a tax bracket. So if we can do all those things now, help them look at their total assets, max their income, never run out with their income, have high level, and make sure they don't suffer big losses everything is taken care of other than the last, to a lot of people, probably the most important part, which is number 6. Number 6 is they want to do everything I just talked about, but over the next 30 years, they do not want their asset base to go down. They want it to stay level, or they want it to increase over time. So they want to take their $3 million of assets. They want to use the maximum income they can take off of it. They want to make sure that it never runs out and they're not going to be paying high taxes. And they want to make sure that they don't suffer a big loss. But they want to make sure while they're doing all this, their assets don't go down and hopefully increase over time, because what they want to do is then use their assets for income and then pass on that same amount of assets, or hopefully more assets that they started with, when they're gone. And if they can do that, did that fulfill every one of their wildest dreams at retirement?
It does. And you can actually do that. And you can actually do that with a great deal of certainty. And you can do that without putting all your money in the stock market where you have significant risk. It doesn't mean you won't have money in the stock market. You will. We're going to mitigate the risk, but you're going to use other strategies and other asset classes to assure, or at least give you the highest probability of success based on the way you described it. And that's what we do here every day. The whole design of our company is around that. How do we make sure that we mitigate your risk as much as possible, give you maximum income, and allow you to leave money to your beneficiaries of hopefully the same amount of money or even more than what you started with, and to make sure that if you do need long-term care in the future and you don't have a long-term care insurance contract, your assets will be there to support that. All that gets put in writing. And don't you think it's important as a consumer, as an investor, as a retiree, as a pre-retiree, to have all that stuff in writing? Isn't it important? If it is, just dial pound 250 on your cell phone, pound 250, and just say the keyword money, and we'll schedule you to come in. We'll see if we can help you, and we'll start walking through the process.
Well, and I'm going to put another leg on that, and that is, it's not important. It's mandatory.
Yep.
It's not important. It's beyond critical. It's something that has to happen. Otherwise, you're going to leave so many holes potentially in your plan that bad things can happen that could literally ruin your retirement if it's not in writing. If it's in writing, there's a lot less probability. The probability shrinks. Minuscule probability that anything negative is going to happen that will affect your retirement lifestyle. So you have to make sure it's in writing, or don't believe it. It's in writing, or don't enact it. It's in writing, or don't invest it. Everything must be in writing.
For more information about Peak Financial Freedom Group, or to schedule a consultation, just go to our website, peakfin.com. That's peakfin.com. And thanks for watching.